Well, hello everyone. It's July 15th. We're about halfway with the month, and it's Monday, and let's talk about the markets. China announced that their growth is slowing down sharply. I mean, tremendously. We're talking the lowest level of growth in 26 years. That means this tariff war is really taking its toll, not just on the US, but on the rest of the world, including China. That's putting a lot of pressure on China. That's number one, all right? Yield on interest rates last few days has been going higher. Bonds have been going lower, but they look like they're at a support level, which tells me that we may see lower stock prices and slightly higher bond prices and lower yield this week. Expect stocks to start deflating just a little bit, okay? Earnings are here. 57 S&P members are reporting this week, including Netflix, Microsoft, the big caps, and a few bank stocks. Bank stocks is what we're looking at right now. Now, overall, earnings are expected to be down in the S&P 500, okay? Just the S&P 500, 3.4% down from a year ago on about 3% higher revenue, all right? So the numbers are not that bad. The expectations are not that bad. And if we find that they're in line with the actual numbers, volatility is not going to be that bad. But there's very little catalyst and there's very little reason to see upside right now. So I'm expecting earnings to keep the market a little lower and then rise. It would be very difficult for the stock market to rise from the current level substantially. So look for volatility to increase a little bit and look for bonds to begin going a little bit higher or moving sideways. Don't expect bonds to go much lower for the near term. Expect them to rise back up. Fed is expecting to lower rates, and that means bonds will rise or at least stay near the current levels. So again, not expecting too much. Keep your eye out. Again, keep your eye out on the 2900 level on the large E-mini S&P, or if you're trading ETFs or stocks, keep your eye out on the 290 level on the SPY. I keep talking about that level because we haven't hit it, but that's where the major selling pressure will be, right around a little bit higher, about 290.12, 290.13, and on the E-mini S&P around 2912. So again, around the 2900 level, expect volatility to go up a little bit, expect markets to cool off a little bit. I'm not expecting a huge downside, just a cool off from what we saw a week ago, and expect more turbulence in the global markets. Earnings is what we're focusing on right now. All right, I'll talk to you guys tomorrow and I'll give you more updates. Talk soon.